Hello, this is Joseph Gillette Sr. with Venture Capital Cross, and today I want to talk briefly about the difference between venture capital and private equity. And first, I want to say that these distinctions are not anything more than a discussion about the use of the English language. The words venture capital and private equity are just terms. There isn't any regulatory designation or a specific license you need to do either. If we were looking at this from a regulatory perspective, we would just call them private markets or unregistered securities, private securities transactions, things like that. Venture capital is a term that originated from the days of Christopher Columbus, when a group of people would form a corporation to go to the United States or to explore mining resources in a foreign land, and that's a real venture. And those ventures required capital. And it also goes back to the origin of the corporation, why corporations were formed. The Dutch East India Company was one of the first corporations of its type, when you had a group of high net worth investors chipping in, and they shared in the profits or in the losses. And that's where venture capital got its term. And in today's world, it's mostly startups. Companies like Airbnb and Uber start from nothing, have an idea on a napkin, and you need capital to put it into reality. But there's different stages of venture capital. You have, at the first, your angel round, which is usually just a single individual or a group of angels that get together just to put some money. And then you have a seed round, which is more of a formal investment round. And in the seed round, you might have some individuals, but it could also be some venture firms or venture funds. And that's kind of the venture capital community usually focuses around those early stages, and maybe even up to the ABC rounds, which are sometimes considered growth capital rounds, because by Series B or C, the company is probably post-revenue. They're already making money, but they still need growth capital. There isn't really a black and white defined line that differentiates venture capital and private equity, but there's a few characteristics that we can talk about. And one of them I was alluding to in this growth timeline. So as a company is growing, usually the later stage it is, it's less venture capital. Private equity is basically the market for private businesses. And those businesses are typically well established. For example, private equity firms do not invest in startups. Private equity firms look at established private businesses. They can do mergers and acquisitions. They can do roll-ups, all different types of things in private markets. They can take a public company private. And private equity works with investment bankers to take a private company public. But the private equity firms are really the capital. They're usually the principals. In other words, a private equity firm is not typically brokering transactions. That's what broker-dealers and investment banks do. But you could consider even a small business private equity. Let's say you have a wedding venue or a hotel with about a $5 million asset value. That could be considered private equity. And in the broker-dealer world, we call those Main Street deals, which, according to the regulators, are not really selling securities. Like real estate is not securities. It is a lightly regulated market. You need a license to be a real estate agent, but real estate is not regulated heavily like securities is. Of course, your local regulations, building codes, things like that, zoning is regulated at the county level, but the actual market of real estate, like how you value properties and stuff, is pretty standardized but not regulated. For example, you don't have a real estate commission looking at property valuations or seeing if they're accurate, or looking at building inspectors, things like this, like you do with FINRA and with the NFA. So that's kind of an overview of the differences between venture capital and private equity. a couple other points that private equity are typically dealing with large firms, not necessarily, but some of the private equity funds are just massive in size. So they typically target a larger deal size than venture capital. Venture capital actually likes to target small deals because the whole idea is you're going to achieve high growth. Have a great day.